Live here at our global headquarters here in Lagos. Yes, on Monday, the Nigerian Stock Exchange and Afrinvest, for the first time in the history of the Nigerian Stock Exchange, launched two new indices: the NSE-Afrinvest Banking Value Index. You can see you can see that on the NSE. If you go there now, of course, on Afrinvest. Then we have the second, the NSE-Afrinvest High Dividend Yield Index. That's your BVI, NSE-AFR BVI, and NSE-AFR HDYI. So this is something very new when you have a stock exchange, and it's the practice in many parts of the world when stock exchanges partner with specific investment banks and securities trading firms to launch specific indices in the market to help you track the market a little bit better. So that's what you're talking about, Robert. Good morning. Thanks again for coming through.
Thank you.
Take us through why these two applicable benchmarks are interest in Nigeria, and of course we know your annual banking index. So it's natural for you guys to do a banking value index.
Yes, essentially yes, because again, you know that we've been here for quite a while. 2018 was 23rd anniversary of Afrinvest, and in 23 years we've published annual banking sector reports for 13 years. And based on our experience, we believe that for most investors who are investing within the banking space, they target value, right? So we decided to screen based on the criteria for value, which I will roll out in the course of this interview. Again, by value, we're referring to investment in specific banking stocks, that will give more than, what investors are likely to get. If
are all the listed banks in this index?
Definitely not.
Why?
Because not all the listed banks currently trading on the NSE, are considered value stocks.
Okay, so let's talk about the value stocks. Who and who? All the tier one folks, yes.
So what we've done, was to, this index dates as far back as 2013. I mean, if you look at
the basis.
Yes, that's so. When you look at the historical trend over the last 6 to 7 years, looking at 2013, what we studied was to say which stocks have investors historically invested in on the basis of their fundamental criteria.
In the banking sector.
In the banking sector. And we found out that most investors target banks that have very high return on equity. So our criterion for that was to look at the last 8 quarters. So if you are, the last 16 quarters. So if you're a bank that has historically returned above industry average ROE, which is return on equity, in at least 8 out of 16 quarters, then you qualify to be in that index. But that's one of the several other criteria that we consider.
Capitalization?
Capitalization is part of it. But again, speaking to fundamental value, we also look at some market pricing metrics that some investors want to look at, apart from ROE. So in our methodology, if
price to earnings?
Yes, if you pass the test of market pricing. So we use basically 3 metrics. We're looking at book value to price yield. That's the flip of price to book. We're looking at the earnings yield, and then we're looking at the dividend yield. Again, you must have consistently performed above industry average in at least 8 of the last 16 quarters, right? So on that, we now screen further by looking at the liquidity, because you can't buy into these banks if they are not as liquid, right? So our test for liquidity was average traded value ratio, meaning we're just looking at the average monthly traded value over the last 12 months.
And the available float?
Yeah, of course. That's the basis for market capitalization. So you must pass the test of at least above 2.5% market capital, free float market capitalization when you look at the universe that you're screening. And we backtested to see how these have performed over the years. Remember, I said this since 2013, and between 2013 till date, it was only in 2015 that the benchmark NSE index for the banking sector had outperformed our index. So that gives us confidence that the methodology is right.
How many banks are in this index?
So by methodology, you cannot have less than 5 banks, in the index, but you can have as
many as qualified.
As many as qualified.
So how many?
Yes, currently we have about 5 banks.
5 banks.
5 quality banks
in this index. And they are. Let's just go for full disclosure.
Okay.
Yes.
So the banks that we have here are pretty much Access Bank. We have Zenith Bank. We have Guarantee. We have Stanbic, and then we have UBA.
Okay, great.
Currently,
So let's talk about the Afrinvest High Dividend Yield Index.
So the high dividend, Nigerian investors are also known to be income investors, meaning that they target when banks, or not just banks, the entire securities listed, that's our universe, they are much more interested in companies that pay dividend, not just consistency in dividend payment, but companies that offer high dividend yield, which was why the index was named High Dividend Yield Index.
So my dividend policy comes into play here.
Exactly.
And how much of my profit?
So again, we look at a 6-year period, and we're saying that if you are a company that has paid dividend at least in 4 of the last 6 financial years, then you qualify to be in that index. Not only that, you must have made positive earnings in the last in 4 out of the last 6 years, as well. And then your dividend payment must have outperformed the market in at least 4 of the last 6 years. So these are conditions that we use to screen the securities. Again, when you backtest, all other metrics like liquidity and market capitalization also come into place. When you backtest, we found out that this particular index has behaved in line with the market. So a year the market is bullish, it will outperform the market. But again, any year market is not as positive, it also underperforms the market.
Okay, great. So we'll be tracking these 2 new NSE-Afrinvest index, the banking and the dividend, high dividend yield index. But again, the big story yesterday, I'm sure, which all of you research analysts focused on a lot more, was the MPC. How do we treat these first MPC decisions of 2019?
Well, it's in line with expectation. We had expected that the Monetary Policy Committee will move in that line. There are metrics to be looked at, for taking that decision. And the market was not disappointed at all that the MPC voted for retaining all policy parameters, retaining MPR at 14%. Again, it has been argued that even if the committee had signaled, reduction was not in the was not part of the consideration. It wasn't on the table at all.
So is it a hike or a hold?
Is that a hike or a hold? But again, already the central bank, which normally will carry out the mandate of monetary policy committee decisions, they've stuck to a guidance towards increase in the short-term market rate. For OMO, for example, we are seeing discount rate for the long-dated bills 364 at 15%. That implies above 17% yield that investors will get if you plug in for the next 364 days. Now, what this signals is that even with a hike, or with a hold or a reduction, the market rate still continues to guide. If you like, the MPR is currently at 15%, even though it's at 14%, because most investment will now target what the risk-free is offering, which is treasury bills, and the OMO rate, which currently at 15%. So there was no need, for instance, if there had been a reduction, it would have been antithetical to what the policy objective is, because market is already moving.
Yes, since the last meeting, in fact, since most of last year, the central bank was already moving in that direction.
Exactly.
Whatever the MPC decisions were, it keeps going in line, trying to align with what the MPC is doing at the fixed income market, in particular the treasury offerings.
Absolutely. And again, this has spoken to the consistency of the committee, and then what we saw yesterday was an alignment between what the MPC is doing and what the central bank, which is the bank, is doing.
Great.
So
for fixed income.
for the market.
So how do you think the equities play should be for this MPC decision, since the treasuries have a kind of idea where they're going?
Sadly, the market is already tilting towards the fixed income market. So most investors, we like to play in that window, because there are so many other issues that are sort of boxing the equities market. Election concerns is one of it. The central bank alluded to it. I mean, the governor alluded to it yesterday, that we've seen some FPI inflow, regardless of the so-called risk concerns, political risk in the horizon. But again, most of these funds inflow, they've not been targeting the equity segment of the market, which is why you've seen this sort of performance. It's also noteworthy that we've seen, in the last 7 trading days, we've seen, first we saw 6 consecutive days of positive gains, before we saw a loss on Monday, and again on Monday, and then yesterday again, the market was down. So we do not expect that there will be major there's no major trigger, so to speak, that will drive the market before the elections are over. You know, we are very hopeful. We are hopeful.
Either upside or downside.
So
well, we just cruise along.
So what we're seeing right now are investors trying to spot opportunities. Again, do not forget that fundamentals are still right. You know, albeit
just take
sort of moderate.
So just take your stock picks.
Exactly. So they are taking decisions based on market readings. You know, they are not so aggressively, you know, going long on any securities, and that's why you're seeing, you know, these pockets of gains and losses that the market is returning. You know. But we see how that play out after the election.
We'll return to you in days and weeks. Okay, thanks for coming through.
Thank you.
Robert Omotunde, the head of our research at Afrinvest. Let's come back after the break, of course, to remind you a few of the decisions yesterday. In case you missed that, at lunchtime yesterday, or a little after lunchtime, when the Central Bank Governor Godwin Emefiele read the MPC decisions, we'll try to recap that for you. Then, of course, the second biggest story on the business side, from Abuja, Nigeria's political capital. All that in part 2 of Your Business Morning.